What's up guys, it's Nathan here. Today, we're going to dive into the recent property rebound and why this optimism might be premature. Despite signs of recovery in the Australian housing market and recent movements in auction clearance rates, Morgan Stanley has warned that the Reserve Bank of Australia may still need to raise interest rates 2 more times this year to control inflation. We'll dive into the factors influencing this rebound and the potential risks. The recent rebound in the property market has fueled hopes that the Reserve Bank of Australia has concluded its tightening cycle. This might be short-lived. Morgan Stanley has warned that the central bank might actually need to raise rates 2 more times to control inflation. The optimism surrounding the property market as indications of a recovery in Sydney house prices and improved auction clearance rates have added on top of this. The recent Reserve Bank decision to leave rates unchanged this month has further boosted the sector. In March, Sydney house prices surged 1.4%, which is 4 times faster than the previous month. Following these developments, since the beginning of March, the REI Group has seen a 16% increase and Domain has had a 9% gain on their share price alone. And if you find value in this video, please consider hitting that subscribe button as it really helps out the channel, and a big thank you to all our subscribers for your support. Inspires us to create more content we hope you enjoy. Morgan Stanley suggests that many investors may be jumping the gun by assuming that the housing downturn is over. According to Chris Nichol, head of Morgan Stanley's Australian Strategic and Economics Division, he said there's a bias in positioning that considers that interest rate pause is the precursor to ultimately easing of conditions and the start of the next housing cycle, which ultimately has led to a bounce in the cash rate sensitive sectors. Nichol expressed concerns over the premature optimism of the market, stating that our conclusion is that buying into the housing and consumer facing stocks has poor risk reward. Morgan Stanley anticipates that the Reserve Bank will need to implement 2 more 25 basis point rate increases in August and September, raising the cash rate to 4.1%. These potential rate hikes could dampen the enthusiasm of investors who might be assuming that the housing downturn has come to an end. Considering the possibility of further rate hikes and the robust economic data, it would be wise for investors to approach the property and retail sectors with caution. Morgan Stanley went on and talked further about purchasing stocks and said, while considering the possibility of further rate hikes and the robust economic data that we're seeing, it would be wise for investors to approach the property and retail sectors with caution. While there may be temporary gains due to a pause in the rate increases, the long-term outlook might still be uncertain. Alarm bells are ringing as the sharp increases in Sydney house prices might not indicate a sustained recovery in the property market. While house prices did rise by 1.4% in March, which was the steepest increase since October 2021, Morgan Stanley cautions that house price strength is typically maintained only when the Reserve Bank starts cutting rates. According to Chris Nichol, who says when looking at prior housing market cycles, the bulk of price declines occurs when the Reserve Bank is on hold. He further adds that given the expectation of a prolonged period before policy actually eases, a return to weakening prices cannot be ruled out. And remember to like, share, and subscribe to stay informed with the latest property and finance news. The recent gains in the property and retail stocks might not necessarily indicate a lasting recovery in these sectors, according to Morgan Stanley, and the Reserve Bank's current pause in interest rate hikes doesn't guarantee a prolonged easing of policy, and there is a possibility for further rate hikes that could lead to further weakening in the property market. However, to add to this complexity of knowing what actually might happen, we're also seeing record numbers of international migration, which is driving out demand, especially for housing. So I guess it really is anyone's guess what happens moving forward. And did you know, here at Hunter Galloway, we're mortgage brokers and we get loans approved. So if you're looking to work with a great mortgage broker, hit us up at huntergalloway.com.au. We'd love to help. We deal with people Australia-wide and there's no cost for our service. Call us on 1300 088 065 or visit our website huntergalloway.com.au. Guys, thanks for watching and we'll see you next time.